Hello and welcome to Trading the Trend. My name is James Boyd. We welcome all of you here today. Let's go ahead and just do a quick roll call. Naresh, Will, Julia, David, BJ, and many others, welcome to all. Just a quick reminder that tomorrow the stock and bond market is closed. So it's Good Friday. And so I just want to extend to you, hopefully you have a great weekend with you and your family. And also a great time to kind of just take a little downtime, take some inventory, and so this will be the last trading day of the week if we're talking about stocks and bonds. So just real quick as we get started, this class is on trading the trend. We're trying to isolate where are those trends, and then also trying to really distinguish what time frame are we looking at. Are they short-term trends, intermediate, or long-term trends? So we'll actually go through that here today, and we'll kind of talk about how to find some of those trends, and also what are some examples of doing different types of trading with that. Now, also remember, this class trading, that doesn't necessarily mean we can't have investments, but we're going to focus on some of the trading. Trading might be something like maybe 2 to 3 weeks, perhaps, lowest maybe 2-3 days, but probably in that lower end of 2-3 days, 2-3 weeks to 2-3 months, trying to get a trend that we could ride, okay? Now, that would be the goal. Doesn't mean it always happens like that. Now, as we talk about, we'll talk about stocks, but when we also bring up, let's say, options, remember that options carry a high level of risk, not suitable for all investors. Also understand that the examples that we do will be on the paper money software application for educational purposes only, and also investing involves risk, including loss of principal. Now, very important to kind of understand is investing for one person is not the same for everyone, okay? And if someone said, James, 100% of my portfolio is in technology, and someone else says, I have 100% of my portfolio in utilities and staples, well, that's different, okay? So when we have volatility in the market, it would be a really good idea to take some inventory and say, are you really how's your allocation? Are you trying to put all the capital in those more volatile areas? Are you creating your own volatility? Okay, and that's an important reminder. Now, also remember, we want to talk about here today, we're going to look at price levels of certain products first. Then we're going to go down to the indexes just briefly, and then sectors. Okay, from there, we're going to talk about some trading examples that we see in the current market, and then we'll also talk about some current positions. So first off, let's go ahead and just take a look at, I'm going to start with, let's start with the Dow for just a moment, okay? Dow Jones today was down 550, which, when we talk about an index about near 40,000, it's about 1% plus. United Healthcare by itself pretty much dismantled the Dow earlier today, chopping it down below the 20-period moving average. UNH declining. I mean, what do you say to that? Okay, what's a word that describes the drop from here down to there? They said that it was a lot more seniors than were expected, okay? Now, I don't know if there's a certain age where they classify seniors or categorize, but they actually said that seniors went in for some inpatient, outpatient services, and it blew the expenses off, and they actually cut and slashed their full year guidance. Why do we bring that stock up? Well, because it's in the Dow, and the bigger dollar stocks in the Dow can hit the Dow more bigger, and you saw that today it did. Now, big difference when the Dow was down 1% or so or more. The SPX was barely down. Okay, now remember, this has been the fib level we've been talking about for the last week or so. The 61 is where we were last week. And if you're going to notice right here, we're kind of sitting in between the moving averages. Is it bullish? Is it bearish? Or is it neutral? We're talking about the last couple of days. It sure kind of looks a little bit more neutral, doesn't it? Now, I know we kind of like to go on or off, per se, but sometimes in terms of trading the trend is sideways, okay? This is why some people like to look at dividend-paying stocks. This is also why sometimes people like to look at time decay strategies, cover calls, short put verticals, among others. Because sometimes you don't necessarily have movement. And the only constant is time. So the SPX, I'm not sure if we could really say it's bearish or bullish, okay? Kind of looks more neutral. Now remember, that 61% line, that's where we're trying to get above. That line is at 54.12-ish. We have not gotten above there. Back this chart off for just a moment. The major break was really down at 5,500. But first step is to get above the 61. So is the S&P out of the woodwork yet? No, can't say that. Okay, still got some work to do. If we pull up the NASDAQ for just a moment, NASDAQ, we know that NVIDIA hurt the NASDAQ yesterday. We're trying to see some bounces near the moving average right there and right there. So the bounce is kind of where it should be. If we're talking about looking at the moving averages, we want to continue to watch that. I think if we're talking about what would you like to see, we'd like to see green candles, not red ones. Green candles, not red ones. We want to see green candles that the price is closing above where we opened, not lower, and that's why the color of the candles is red, okay? Now, if I were to ask you which product, so if we were going to look at charts where it's tracking the price, what product is actually showing some kind of snapback here today? Well, crude oil has actually been one that's actually been bouncing back quite a bit, crude oil. It's also been Brent oil as well, and gasoline. Now, those three commodities are related to staples. Not really. They're related to energy, okay? So we actually like to look at the prices of those products to kind of see what type of trends we have, and then to say, how do those relate to the markets and or sectors and or industry groups? So that's a theme here today. Pretty good snapback in crude oil. Now, the other thing as I want to kind of say just before we get there is interest rates kind of being more flat, which is not horrible. We'll take it. Just kind of keep in mind when we kind of go forward here, the US dollar still under pressure, okay? Still under pressure here, sitting down right around about 99 or so. The one thing I want to make mention that the yen still near highs. If you take a look at this, the euro is still high, the pound is still high, the Australian dollar is still high. So investors here, if we take a look at this, the US dollar, as people are been selling the US dollar, where is the money going? Okay. And so far, it's been going to all the other major currencies out there. How does that relate to our class trade the trend? Well, some people might want to trade the trend of the US dollar itself, but you got to also understand is if they're switching into, let's say, different currencies, they could be investing in other international markets. Now, just a quick heads up, I can't pull up the charts, but I'm just going to speak generally. Today, we saw India, the region, the area, okay, hit a short-term high. We saw Mexico hit a short-term high. We saw the United Kingdom back up near the high. Switzerland up back near the high. Germany not too far behind. And the European zone actually fairly strong as well. Stronger than the U.S. markets. So as the money has been changing from, let's say, one area, let's say the U.S. and the dollar, to other areas or regions, notice their equity markets kind of showing a little bit more relative strength than ours. Okay, that's important to understand because when we talk about trading in stocks or markets, it's not just the U.S. market. Okay, now quick reminder: Kevin and I normally do the ETF class on Friday. We're not having that class and we have no webcast tomorrow because the market is closed. Okay, but I just want to make mention that we kind of mentioned about some of the other regions where the capitals might be going to. Now, we did see gold actually hit $33.71 an ounce. Wait, wasn't gold just at 3,000? That's right. It was at $33.71 overnight. You thought it was high at 3,000 and it went up 10% more after the 3,000. Unbelievable. Okay, how high is high? Now, what I want to do is just real quick is talk about sectors just briefly. When we talk about crude oil, Brent oil, we also saw gas getting a little push to the upside. The sector that's really leading the most, as we can see on the left-hand side, it's crude oil, okay? So you have to understand that when you look at the sectors, you got to think to yourself, what are they selling? What are they selling? Are they selling rubber duckies? Are they selling soap, toothbrushes, calculators? What are they selling? They're selling natural gas, they're selling crude oil, they're selling gasoline, whatever, okay? And so that sector related to the prices of those commodities. Now, one thing that the investor could do is say, hey, James, I might want to maybe consider maybe just buying the sector itself. That's an option. You're buying a collection. They're not all equally weighted there, but there's some stocks that really matter more. Now, I want us to kind of think, are there any stocks in energy that are maybe getting a little pushback to the upside? Now, let me kind of just say this one thing first. And I want to kind of write this down as we kind of talk about this. And I'm going to switch the gadget. I'm going to kind of go to, let's kind of go to Scratchpad for just a second. There you go. So the one kind of major takeaway so far is US dollar, okay, still dropping, okay, still dropping. Other currencies rallying, okay, I mentioned the ones. And also we're starting to kind of see other markets, as I mentioned, and I'll recap. India, short-term brand new high. Mexico, a short-term high. United Kingdom, Switzerland, Germany, and the European zone. Okay, so liquidity is that liquidity of capital, cash. They're trying to find where there are liquid markets where they could actually invest. Now, when we talk about kind of another point here, which is crude oil, okay, we're seeing a little boost in the energy. Move that right there, the energy sector, okay? Now remember, for some investors, they might just say, look, James, I'm just gonna buy the sector as a whole. I don't want individual company risk. I'm just gonna buy the group, okay? That's an option, okay? Could consider. If we actually said, hey, could we buy individual stocks? We're gonna look at that in just a moment. The other thing we wanna kind of take away so far is when you look at, let's say, utilities, those have actually had a pretty good bounce back. And if you kind of look at this, going back to where we dropped down on April 4th, we're pretty much right back to where we were before. I'm going to put that right there, utilities, okay? Now, some people say, well, they don't go up as much as I want. I want things to go up more. The first thing is when you go through volatility, what assets or what areas of the market tend to hold a little bit better, okay? So far, utilities have been holding. It's not surprising, okay? We talk about it all the time. And if you take a look at, let's say, Staples, go back to the April 4th where we dropped, Staples is right back to where that drop happened. So we're going to put Staples as holding as well. Now, there's some stocks there that are actually in both areas. Now, option number one is the investor might just buy the group, okay? They might just buy the sector. They could buy, let's say they consider the Staples sector or buy some individual stocks or consider those in those areas, okay? So I think a lot of times people forget about just this, maybe the sector industry group in general, okay? That's step number one for many investors, okay? And then number two is maybe considering individual stocks. Now, when we also kind of take a look at maybe another area for just a moment, I'm also going to include financials. When we take a look at financials for just a moment, financials have actually been holding in there, okay? Financials kind of right back near that 584 level, and it's actually been quite strong here, okay? So overall, I mean, you look, it hasn't broken up through there yet, but when we actually look underneath and said, is it making higher lows? We always define higher lows the same way, red and green candles side by side, and then draw a circle. Red and green candles side by side and draw a circle. And if we actually, for example, see that those ovals are getting higher, that welcome to higher lows, okay? So financials are not necessarily doing horrible, but matter of fact, they're looking like they're trying to recover. They're not as strong as utilities and staples, okay? But you like to kind of see that get a little move back to the upside as well. Now, any questions? Now, comment came, where can I find the indicator that is being used for this class? Okay, so first off, if you're talking about the chart, let's go to share for just a moment. If you said, where can I kind of get the setting that we have on this is really just using two different moving averages. It's labeled as a whole moving average, and the shorter term line is a 10-period moving average, and the second one is a 20-period moving average. That's what's on the chart, okay? And those are the ones we like to kind of use as a template. It's not the only one, but it's probably the main one when we look at charts initially. That's the example we like to kind of start with. Now, if you said, I don't even know how to put that on, go to the very top right, go to setup, open shared item, and then copy and paste in. Okay, so set up, open shared item, copy and paste in. Okay, not too bad. Now, other questions that you have. So what I want to do, now the comment from Dragon Rider 108 said Japan. Japan was kind of back up into the neutral range, okay? Wasn't horrible, but I would have to say that if we're talking about is Japan being stronger than India in the short term, no, probably not. And is it stronger than Mexico? Didn't look like that. Now you can double check me, Dragon Rider 108. I'm just saying the areas, if money is being taken out of domestic markets, put internationally, you know, now, by the way, how could you like statistically check? Well, go look at 1 week return percentage, okay? So if I brought up, let's say the Market Watch, and I said, hey, I want to just take a look at, let's say, indexes, and I want to kind of look at kind of the percentages on a 1 month return. Dragon Rider do this, okay? I just have the domestic indexes like Dow, S&P, NASDAQ, etc. As investors, you might look at foreign markets as well, and you might use different products as a proxy for that market. And you could just look at statistical returns that kind of see statistically which ones have shown stronger relative strength. Now, I want to kind of go to just real quick kind of some examples that we're seeing here today that are kind of showing some interesting trends. Now, I want to go back to just real quick. If I said utilities, are there any utilities, for example, now one of the that are kind of showing some strength? Now, if I said, I don't know, I don't have a clue, I'm going to go to the Market Watch, I'm going to go to just real quick where it says visualize. And when I go to visualize, what you're now going to, and there's, by the way, messages, and there you go right there. Okay, so you probably had that come up on your side as well. Okay, now I'm going to go Market Watch, visualize. What is this doing? Well, what it's going to do is it's going to show us the sectors in the market. These are the stocks in the S&P 500. White boxes, the sectors. Okay, now do not forget, if we hit the drop down right there, it's going to expand the sectors. This is a way to search. Okay, if I click on utilities, it's going to give me a whole list of stocks, or I should say, show me a pool of stocks here that is in the utility sector, right there. Okay. Now, are there any stocks on this that are actually breaking out today? Any of them? Now, by the way, could I take this list and can I maybe take this graph and kind of make a list out of it? You sure could. Now, what I'm going to do in this case is I'm going to go to a list, or I could just bring up a stock in here and just start checking some. One of the stocks that was getting a little push here today was AEP, okay? So let me kind of just go back to something just real quick. Go to the 3-year weekly chart. This is the trend of a 3-year weekly. Now, just kind of want to see where it's at. Kind of started back here 3 years ago. And now we actually are right up there. Zoom in on the right-hand side. Sometimes it's nice to kind of see what the general trend has been over time. And if you kind of look at what's been happening over the last couple weeks, kind of the old highs kind of becoming like the new lows, okay? Now, option number one is maybe the investor says, maybe I want to buy the shares of the stock, okay? The company does pay a dividend, that yield being 3.42%. All right, so that's an option. The second option might be maybe the investor says, I don't really want to buy the shares, and this is a question that we've had, so I want to kind of loop it in here. Wonder if we kind of use the synthetic, okay? Synthetic is just, and I'm just going to kind of show you this. Let's say the investor buys 100 shares of stock, okay? Buy 100 shares of stock, we would need about $10,800 worth of capital. And what you're now going to notice is when we take a look at this, we're on the analyze and we're on the risk profile. So what you're now going to notice is if we bought 100 shares of $108 stock, $10,800, okay? The diagonal line is just the profit or loss diagram as the stock goes up or down, and the delta there is 100, okay? Now let's take this back. Wonder if the investor said, James, I didn't really want to buy the shares of the stock. I wanted to have a right to buy the shares of the stock. But also what I want to do is I want to see if I could not just pay that. Is there any way I could receive a credit? Well, yeah, we could actually go on both sides of this. We could have a right to buy the shares at the strike price from now until expiration. And then number two, we're going to go right back to what we were talking about on Tuesday, that section where it says call or synthetic, or also known as a combo. Combo meaning a call and a put, example given. I'm going to click on that. Now, if I pick on the 105, okay, the 105, we're buying a call and we're selling a put. Now, when we take a look at this and say selling a put, we have a right or an obligation here. Well, in this case, if we sell the put, we have an obligation from now to expiration to buy the shares at the strike price, okay? So the biggest thing to kind of understand is there's risk of maybe being assigned to buy the shares. Now, the investor might say, well, if I did have to buy the shares and the stock goes to zero, I could lose all the way to zero. It's the same as a stock investor, okay? Now, the other risk of this is when you buy a call, you sell the put, you got spreads on both of those, okay? That's a risk too, okay? If we buy the call, sell the put, we don't get the dividend. We have the options. We have a right and an obligation. Now, what I'm going to do, right-click on this, analyze the trade. Now, notice down below, I have the stock selected here. Look and see the bottom left. This is a stock diagram, 100 delta. But now if I uncheck the stock and just put the combo there, you're now going to notice the diagram looks like the stock position, synthetically replicating this stock profit loss diagram, but it doesn't have the shares. We're not putting out the same amount of capital. And the second thing is the delta is pretty much the same. Which option Greek, delta, gamma, theta, vega, which option Greek is the biggest? Not even close, it's delta, okay? So if someone does a long synthetic and someone says, is this kind of bullish? Please understand, if you do a contract and if the delta is closer to or at 100, this is a bullish position. This is like buying 100 shares of a stock, but it's different because we actually do have an expiration, okay? Now, what we're gonna do in this case is, I'm gonna first do this, gonna go to the paid money count, and what I'm gonna do is, I'm gonna bring this back on AEP. I'm just gonna put in this position first off, okay? Just for a second, I'm gonna put it in, right click on that 105, ask, buy, gonna go right to call or synthetic, okay? Now, we always wanna kind of make sure that it has a mid price there, 353. Now, when I put this position in and I say confirm and send, now notice, not putting a target yet, not putting a stop yet. I just want to see if the position fills. Confirm and send. Notice actually the cost of the trade, including the commission. Notice the differences in capital outlay as well. And now if I do that, say send the order. So let's see if the position can fill, okay? Now, just like a stock trade, you're probably thinking about, well, I have a target or I have a stop and so on. Well, we can put those on based upon conditionally exiting at those price levels on the stock. So let's see if that actually fills it in just a second. Now, the other one that I just want to make mention that was getting a little push here today in that space was Duke, okay? Duke was another one that had when we talk about a 3-year weekly chart, I'm not going to say it's the most perfect cup and handle we've ever seen, but I think there is, we get it, okay? There was some type of pullback, those wicks kind of touching each other, and what you're now going to notice is a little cup right there, and it's a large green candle, okay? I mean, I don't know if you say that's small or not, but I mean, that looks pretty strong there, okay? And it would be the highest close for the week that we've seen in a long time, above the area of resistance. Now, I want to have a little fun with you. I don't know. Is that good? Is that a yine? Yes and no? Or is that just don't know? Some technicians might say large green candles with potential volume. That could be a potential stronger setup. But you got to remember, with any setup, it's just a setup, okay? Got to see how it plays out. Now, the biggest actually thing is, Chuck, no worries, welcome. So that's kind of, so the one trade I'm going to kind of put on the left-hand side, okay? So when we talk about, let's say, utilities, kind of want to point this out here. We did the example of the AEP, and the other one we kind of made mention of was Duke. Did I miss any? Okay, did I miss any? Now, I'm going to also kind of put down here, for example, given what we talked about, the sector question mark. And what do I mean by that? Well, maybe an investor might say, James, I'm just considering buying the sector, okay? Could be a potential option. Second, or maybe an industry group in that. Second thing we talked about is the individual stock, the individual option position on AP, and then Duke. Now, what I'm going to do is on the Duke example, and I'm going to do this faster because we talked about it. I'm going to go back to Duke for just a moment. This is what the stock looks like. If I were to ask you a question like, where do you see the support level? What price level do you see it at? Now, I'm going to do a stock position here. I did an option position. I'm going to do a stock position. If I go back and said, okay, where do we see support? And again, I'm imagining I'm going to take a ruler or a level. And if I was going to draw horizontal lines and get multiple touches, probably 115. Another area might be in the vicinity of, let's say, 120 or so, okay? Now, the one thing is we saw it drop down below some support areas, but what you see is it dropped down below support, and it ricocheted or slingshotted right back to the upside. Those are called V patterns. So, in other words, someone was taking advantage of volatility in the marketplace, and the higher the volatility tends to drop the prices down. Now, some investors say, you know what? Tap me out. I can't take it anymore. Other investors say, you know what? I'm so sorry you tap out, but I would really like to buy those shares. Why don't I give you a couple $100 bills and take those shares from you, and hopefully you can feel better. And a shorter term investor says, I'm out. And the other investor says, spank you very much. Let's see what happens. They don't know for sure if it's going to go up, but they're just trying to take advantage of the price flux. And sometimes the price goes right back up, okay? Sometimes. Now, what I'm going to do in this case is, let's say the investor buys the shares. How do we do this? Going to right click on the chart, which is one way we could do it on a stock position. Going to go to buy custom. Going to go with OCO bracket. Now, on this bracket right here, sometimes what the investor might do is they might say, hey, James, I'm going to take it. I don't like the 120 because I think that's pretty tight. I don't like the 115 because I think it's pretty low. You might be thinking maybe that level might be somewhere right in the middle, let's say 118 and change. If we took 118 and change, less, let's say 2%, it's going to give us 115.64. The con about that is if we set that stop right there, that's right above the horizontal line. Ladies and gentlemen, boys and girls, some investors might say, I don't want to do that because I'd be stopped out right at support. Maybe you set the stop right below that. So I'm going to take that number, I'm going to lower it by $1 just to try to get a little bit more fluctuation or test the support level, hopefully, and not get stomped out, okay? So it's just getting a little bit more room, but we did do a 2% stop. So I took the midsection, less 2%, and I said, where would that stop be? It's going to be right at the bottom, and we just want to make sure that could it test it and maybe squeak its way out and not get stomped out. We're going to find out over time. Second thing we're going to do is probably just kind of talk about the target real quick. If we kind of said maybe a potential target, go back and look at a weekly chart on this. If you had something where it's like a V pattern or a cup pattern, this is your classic Fibonacci where we were going from the prior high, dropping it down to where that low was. And if we're talking about the first extension target, 129. Now, the second level, Fibonacci-wise, is going to be 145. I'm not sure if you are, but some people like to take, for example, they like to put on the 200%. The 200% is just the channel width, okay? And that's all it is. It takes that channel width and then adds it on top. If we put on here 200% and try to get a little bit deeper target, if it can get there, if, it's probably going to be right around 136, 137. How do we put that on there? Well, we're going to right click on that chart, edit properties, and then what I'm going to do is I'm going to go take this 423 out, and I'm just going to type in 2.00. 2.00 is the 200%. It's the channel width of price, add on top of resistance. I said 136. The true answer is 135. Okay? Now, if I go back and put this on, we're going to put a target right at 135. Now, if we're talking about this trade, we're really talking about the price appreciation. But does the stock pay a dividend? Okay? Now, we're trying to get the stock appreciation. The last dividend, the ex-dividend date, was February 14th. Fast forward 3 months, it'd be 5/14. Maybe could there also be a dividend as well? That dividend's $1.04 quarterly, okay? So someone might say, this ain't chump change here, okay? That might be a little cherries on top or sprinkles if the trend were going to continue. So 2 trades we're going to kind of just add here, just real quick. Let's go back so we can summarize this AEP. Now, did that trade fill? And I'm going to put this right here of things we talked about so you can follow along. That was a long synthetic example. Duke was a stock, okay, example. Now, if I went back and let's just make sure, let's go back to that. Did that trade fill? I don't see anything yet. How do we figure it out? It's right there, okay? Now, it's not letting me click. What's wrong? I got to change that day to GTC, okay? Now it allows me to click on that, confirm and send. And if I did that, there you go. Now, in this case, what you're now going to see is that does fill, and there's the position right there. So let's kind of go back to this for just a second. Let's double check this first one. Did AEP, did it fill, yes or no? AEP, it has not filled. If I click on this buy, and I right click on that, and I say cancel replaced order, how far are we off? I said the 358 debit. That's kind of surprising that we weren't able to get filled that, okay? But if we're over what they're asking, it kind of leads us to believe that maybe, I mean, there's open interest there, but that's the number of contracts that are open and unexercised. That doesn't mean the volume today for that contract. If we went volume, you're going to see there's 29 contracts. We're just saying, just get one. Can we get filled? Now, I'm going to just resend it back and see if that trade can get filled. So I cancel the previous order, trying to get filled there. Not a massive number of contracts, but where there's a little bit more volume, not massive, 57 there. We're only wanting one. And so we're going to have to try to see if that gets filled. The put, a little bit more tighter on the bid-ask spread than the call, okay? So when we kind of go back to this and take a quick peek, want to kind of just mention just the utilities. They're getting a little push. The one thing we got to make mention of is if the economy does soften, could the Fed maybe cut interest rates, okay? Could they? And if they cut interest rates, or at least signal that they might be doing so, the utilities might benefit. Now, by the way, Staples could potentially as well. Now, any questions that you have? Any questions that you have? Now, as I'm kind of seeing if there's any questions, 2 staple stocks to kind of keep an eye on that could kind of really have a longer term pattern, okay? You got really the Coca-Cola that really kind of has more of your classic cup and handle pattern. This retraced 50%, but there's your drawing right there, a little run up, pull back. There's your handle. And if we kind of said, hey, Coca-Cola being kind of the more US market, right? The CCEP is more your Coca-Cola European or Euro-Pacific. And if we look at the Coca-Cola Euro-Pacific, you're going to notice that it's already breached the prior high. So this is still underneath the Coca-Cola umbrella, but clearly they're actually using different currency for sales, okay? So they would actually have their own inventory over there and so on. but they're really actually just having a different entity underneath the umbrella of Coca-Cola. Okay. And so there you go. Now, the question says, is the indicator chart similar to the MACD? Well, let's kind of show kind of a different, just quick example, okay? So the only thing I'm saying about Coca-Cola Europe Pacific is if that one is maybe leading, could there be some correlation to what Coca-Cola is doing domestically? Now, I will say this in just observation. If you go to the grocery store and said, if you bought maybe a 2-liter, a 12-pack of Diet Sprite, Coke, root beer, whatever it is that's Coca-Cola based, I think you'd be surprised, like the prices really haven't come down. They're still pretty high, okay? Now, is there just maybe an inelastic demand for that stuff? That people just want to drink soda, okay? And we all have different things. Some people like to drink coffee, tea. Some people like pop or soda or Starbucks. But kind of so far, the price doesn't seem to really have budged. And so it's kind of maybe wondering, has the demand been able to hold in there, okay? Now, I want to go back to just real quick the question, and I want to kind of just real quick, so kind of mention this, okay? So the question was on, is the indicator in the chart similar to the MACD? Okay, so for just a sec, let's bring up the MACD. Now, we talk about the MACD, the moving average convergence divergence, okay? Look, more of the story, if we kind of just brought this down to the, what does that even mean? We're just tracking momentum. Now, the settings that they're using is a 12-26-9. Some technicians would like that maybe to be a little bit less, 8-17-9. That's just a medium setting. Now, let's kind of look and see how does this compare to what we see on the price graph. Now, let's go ahead and take a look. Now, this MACD actually has a 2-line effect. So what do we actually see right here? The MACD started to turn up. Now, why is it red? And then why is it burgundy? Red and burgundy actually means we're below the 0 line, okay? Red means we're down lower than the previous day. Burgundy means we're higher up than the previous day. That's the difference there. Now, when we start going from red to burgundy color, we started to kind of see that the moving average started to turn. So is it similar? Yeah. If we use the 2-line effect, are we actually kind of seeing more confirmation? We'd actually have to say that if we kind of took that up and went straight up, you're going to see that. Now, remember, this MACD is using an 8-day, okay, setting. The moving average is a 10-day setting. So that MACD histogram was probably about a day prior to the moving average crossing over right there, okay? So MACD is a little bit more sensitive than the moving average. And then what you're going to notice is the very next day, there's your moving average crossover on there. So are there similarities? Sure, okay? Now, if you said, well, James, I want to be the first one in, so Bill gets in after I do. Okay, have a little fun with Bill there. So if we went down to 6-13-9. Now, the good and thing bad about this is, well, does this change the signal? Now, on the previous example, that signal was probably about right there. I think it was probably right on the date of maybe what, the 15th? Well, here's the deal. The signal really came probably on the 13th, 14th. So if someone says, James, I like to use a setting like a 6-13-9, the good thing is if it does really go up, yeah, the entry setup or signal was earlier. The bad part is if it doesn't follow through, you got in earlier and it just didn't have time for confirmation. Now, if it goes up, you feel incredible. But if it doesn't go up, you're like, wow, I tested an entry closer to support and it didn't work. And sometimes that's the outcome, okay? That's why some people kind of like that middle setting. So the comment is when we really take a look at this, between, let's say, the MACD and the moving averages, Yes, there's some similarities. Now the other thing to kind of bring up is Catherine brought up, which is Pepsi was downgraded. So here we go. We got Pepsi, okay, blue, and you got Coca-Cola, let's say red, okay? Well, what you're going to notice is that people are liquidating, or portfolio managers are liquidating Pepsi. Now, Catherine gives a little bit more insight. Ozempic killing snack sales. Okay. Oh, sure. Blame it on Ozempic. Okay. But what you're now going to notice is if portfolio managers are trying to ride the trend, well, there hasn't been an upward trend on Pepsi. They might be selling Pepsi in favor of buying Coke. Now, if we actually said Pepsi going down, Coke going up, we also cannot forget you Dr. Pepper people, and that Dr. Pepper is KDP for just a second. That Dr. Pepper is also getting a little squirt to the upside as well. And do not forget about maybe a grocery store that's trying to sell that stuff, perhaps. 3 of them to be exact. Kroger is actually getting a little brand new push. By the way, that's above the April 4th sell-off. Costco, yours truly, getting above that $9.89 threshold. And if we look at Wally World, okay, which I went into Wally World probably for the first time in 10 years. I told the cashier, I feel like you guys should like sell tickets to get in here, because this is like going to the human zoo of just seeing all the happy people in America, okay? And it was a great experience. Good people down in St. George, Utah. Well, I had a good time. I was like, wow, I haven't been in here in years. But if you take a look at this, some of these companies coming actually back. So keep in mind, Coca-Cola, Dr. Pepper, you actually got Kroger, which is selling it, example given, Costco, and then Walmart. Now, I do want to kind of speak to just real quick, let's go back to just real quick the energy sector in the last 3 or 4 minutes and kind of talk about counter trend. What is counter trend? Well, if we take a look at something like, let's say, ExxonMobil, counter trend is where the stock has been down, but then all of a sudden it's made lower lows, lower highs, and it's gone from a lower low and it's going back up, but it might still be in a downtrend, okay? So one of the risks to, let's say, energy stocks is the trend has not been super favorable. You look at Chevron, I mean, that just hit a lower low. You go take a look at ConocoPhillips, you actually just made a lower low. So the dangerous thing about these stocks is if the investor buys these shares, you got to be very, very mindful of where the resistance levels are. Now, if I were to draw this resistance like there, or draw a resistance there, is it possible that the investor might try to trade a move back up to the resistance? Bullish. Yeah. Okay. Why do they do that? Well, what they try to do, the key word is try, is these moves from, let's say, a potential diagonal support to the top, those are 26% moves from bottoms to tops if those lines play out. Now, even if they just got the middle of that, some investors might say, James, I'm going to try that bounce back. Now, that does not mean they maybe treat that position like an uptrending stock like Philip Morris, okay? But they might say, I might trade maybe a half position, example given, to see if it snaps back. Noted. So I want you to just kind of keep in mind, now these are not recommendations. We're going to kind of pull out examples of FANG. Could that bounce back? We're also going to kind of say with that, when we look at BKR, that's another one that's kind of at a critical juncture. Why do we say that? Well, notice that this is where we kind of fell down through a major level support, and we're right back up near that horizontal resistance. BKR is another one that some investors might be watching really as well. The other one I did not make mention of in utilities, I think we could just kind of say that we mentioned it, was EXC as well, okay? If I was also going to talk about a financial stock that some investors might be watching, maybe for potentially a counter trend trade, it might be Wells Fargo. Wells Fargo, if you go back and really look at this, this is another one that's trying to maybe try to go back up to the top of the channel. Now, the thing is, trading counter trend is possible, okay? But you just got to respect the resistance and the investors understanding they're trying to get in and out prior to that trend resuming to the downside. So I want you to kind of practice some counter trend trading. Why do I say that? Well, because some of these percentages from support to resistance have gotten quite wide. And even if the investor said, James, I'm just going to try to get half of that, if possible. If might be a setup there to kind of do swing trading, trading a little trend in that longer term trend. Now, I'm out of my time here today. I want to actually thank you for your comments and questions. I also tried to include some of the questions I got on X, and thank you for that. Want to also say thanks to Barb as well. If we take a look at this, some of the questions. So yeah, absolutely. You can go to Schwab, you can go to Trader Talks, Schwab Coaching Webcast, right on YouTube, and follow us. I will also put a link to the playlist for this class in the chat just momentarily. Stay tuned for our next session coming up. Thank you, Barb. And make sure you watch Barb's classes and follow her on X as well. Now remember, with what we discussed, it was done for example, illustrative purposes only. We kind of highlighted 3 sectors to kind of maybe potentially keep an eye on. We did bring up the concept of counter trend trading, and we're going to kind of be focusing on that as we've kind of had some wider widths to maybe try to trade in potentially. Practice that in the paper money account. Now, this has been the class on trading the trend. And with that said, thank you so much, and stay tuned for our next webcast coming up next, and have a great weekend with you and your family. Take care. Bye-bye.